Let's talk briefly about what happened to Chinese currency and where the trade opportunities might have been. The Central Bank of China, they went ahead and they devalued their currency by almost 2%. And in so doing, the dollar versus the Chinese currency in one day, a monthly chart. Chinese currency pair is at the highest it's been in almost 3 years, and this is a huge big deal and opens up lots of trade opportunities. Why did China do it? Because it makes their exports cheaper. They can export more stuff, and hopefully they can help their weak economy. But having a weak economy and doing something like a devaluation of the currency makes it clear that they do have a weak economy. So currencies that are clearly linked to China, such as Australia and Japan, are going to suffer. The Australian currency, New Zealand currency are going to go down when you get bad news about China. Another thing it does, devaluing the currency, it makes the imports into the Chinese country more expensive. So what countries once again are on the short end of that stick? Once again, Australia and New Zealand, because they export to China. That's one of their main businesses. If China's doing terrible, it means commodity prices are probably going to go down, because China is a big user of commodities, and if they're not using them because their economy's slow, that means commodity prices go down. So Australia, New Zealand, and we would add Canada, would suffer because of that. So you can see this big move that occurred in the markets between the time of the announcement of the Chinese devaluation of their currency. For the next 90 minutes, you can see the Aussie currency went down 1.4% versus the dollar, New Zealand 1.1%, Canada 0.7%. This all made sense, these two being the main trading partners, and Canada being a commodity currency. The others, it's hard to say, I guess just residual effect. Now, where was the opportunity? If you were watching this, if you're a trader who looks at the fundamentals, you got a 1-minute chart. After the first minute, it stopped temporarily. Again, after the second minute, it stopped temporarily for a minute or so. Plenty of opportunities to get in and catch these moves in all of the commodity currencies if you were zeroed in on them. And we're talking 100, 80, 90 point possibilities there in that 90-minute swing. Less so in the Europeans, but not sure why you'd be jumping on a European currency other than if you were just trading technical. By the end of the full day, it wasn't much different. The euro recovered. The yen lost a little more ground. Really not much you can do with the yen. That has a few different moving parts to figure out where that one goes. But the euro, beautiful opportunity here. You can see as Europe opened, they saw value in the euro at those lower prices. A nice big move up. Once it got above here, there's a good chance to buy that. Catch a nice move there. And dollar CAD, a commodity currency, the price of oil actually started to go back up. Canada came all the way back to where it was before that news. Then the price of oil started to plummet, and the Canada weakened quite a bit. So a great opportunity right in there. Totally tied into, as I said, between the whole day and that 190-minute period. But there was a nice large retracement in CAD, chance to get in on that one, and a nice move in euro, chance to get in on that one, related fundamentally. That's all. Jimmy Young signing off. Bye bye, guys. Hope you enjoyed that.